So the S&P 500 is near new all-time highs, and when we take a look at the heat map for the Magnificent Seven, we see that Friday's trading session was pretty bullish for a lot of the mega cap names like Tesla, Amazon, Nvidia, Google, Apple, with the exception of Microsoft. And when we take a look at Tesla stock, it's actually at a very interesting area. See, in one of my recent videos, I talked about Tesla stock being in between the symmetrical triangle, and we recently just crossed just slightly over the area where I said there was likely to be some resistance. Now, does this mean that Tesla stock is already, out of the clear and ready to move into new all-time highs? Absolutely not. We could absolutely just consolidate, but it is pretty positive news. But I wanted to go ahead and take a look at Tesla from a larger perspective. And when we take a look at Tesla from just a monthly time frame, we see that Tesla has these long periods where it consolidates for a few years and then just has a massive bullish uptrend and then once again consolidates. And where we currently are right now is the last 5 years have really been Tesla just consolidating. Yeah, we've hit new all-time highs, but then we go back to bottoms and then we hit new all-time highs. And so we really, if you really look at Tesla from the last 5 years, it hasn't really done much. Now, what's interesting is because this is something that Cathie Wood has acknowledged in the past.
This trading around, this trading range, you as a trader and investor, but as a trader also, understand that when you build a base like that, one of two things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe it's going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout. So we're really looking forward to that.
Now, this is a pretty common term in technical analysis somewhere along the lines that the longer a stock stays in place, the higher it will go out of space. And so what's interesting is that Cathie Wood, her fund, or one of her, her flagship fund, ARK Invest, they primarily focus on top-down fundamental analysis, but this just goes to show you that fund managers like Cathie Wood still pay attention to the technicals, regardless if they're looking at the macroeconomic environment, regardless if they're paying attention to the fundamentals, they still pay attention to the chart. Now, what I also want to highlight is that it seems like Cathie Wood still has this very bullish conviction for Tesla stock because it's still her #1 holding for ARK Invest. But I want to go ahead and highlight some alternative data that I think is pretty interesting. Now, for those of you guys that don't know, I was honestly first introduced to alternative data back in my first 2 years of college, where we actually had to do a project where they had us link up with fund managers, right? The college did this. And we got to where we had to write a paper about what are strategies that funds use. And one strategy that was never talked about in the textbooks, but what I learned from the small firm was alternative data, right? So a lot of times hedge funds, right, these fund managers, they'll pay attention to something that's not even part of, how to value a company's intrinsic value or what the charts say, right? They'll look at what people are saying about a company, right, online, which is interesting, right? They'll scrape, I know this sounds crazy, but a lot of these funds, they'll hire, these nice programmers and coders to just scrape a whole bunch of information online just to get a list of sentiment to see what's going on for that stock. And what we see interestingly happen for Tesla is we had some pretty bullish news, right? Elon mentioned that there's going to be an update for FSD. Now, I made a previous video saying, well, that is good news. I don't expect it to take it to level 5 autonomy. But what we see in the alternative data is we're seeing sentiment on StockTwits recently transfer over from bullish to super bullish for Tesla. Now, I know that seems very, imbecilic to even pay attention to. You may say, well, who cares what the people on StockTwits say about Tesla stock? And if you don't know, StockTwits is like the Twitter, but specifically for stocks, right? And so the reason why it's important to pay attention to that sentiment, especially for a company like Tesla, is because Tesla is primarily held by retail investors, right? It's not like Apple and Microsoft, where a large portion of the investors are institutional hedge funds, right? These are retail investors. And so, with Tesla stock, you kind of want to pay attention to what the sentiment is with retail investors. And right now it's kind of super bullish. Now, when we also take a look at, the flows, option flows, right? We're also seeing a lot of big, large institutions start to buy bullish options on Tesla, which is interesting. Again, that doesn't mean much. Maybe it could just be them hedging, right? Doesn't mean much. But the alternative data is looking pretty bullish for Tesla. Now, I recently went on X and I saw this post from Ian McMillan, who is a chartered market technician. By the way, I just recently passed my exam for level 1 of the CMT. And so if you ever see, my profile on X, you'll see I follow a lot of people who are also chartered market technicians. And I also follow a lot of people who are chartered financial analysts, right? I like to just see what people in the field are talking about. And, Mr. McMillan, right? He shared this chart right over here, kind of highlighting the seasonality of the S&P 500. And the reason why I think this is something I also wanted to share on the channel is because historically, we know that August and September is a pretty bearish month for the market. Now, of course, whatever we see in the past isn't indicative of future performance, right? Historical price action doesn't mean anything, but it does hold some weight. And the reason why we tend to see September, August, be very slow months for the market is because we have to understand that a lot of the market participants that are institutional investors, we also have people who are in Europe. And in Europe, guess what? They take holiday around the summer. And, it's not like in America where we take, a week and that's a vacation, right? No. In Europe, holiday is a longer stretch. And so a lot of these fund managers, they kind of go away for the summer. And eventually what we tend to see is volumes tend to kind of thin out. And then once they come back in September, they start to kind of reassess their portfolio. We also have a lot of, mutual funds in America who they end their fiscal year around, September, October. So that's why we see a huge kind of move around September that tends to be very bearish. And so what I wanted to highlight is that while we are in this interesting period for Tesla, we do have some positive catalysts. We have positive sentiment. We also see that Tesla is in this interesting area where we're slightly above this area I mentioned was going to be likely a resistance for Tesla. We are right around the corner where we see historical volatility. So I want everyone to be cautious with that. Now, real quick, I also just did a recent poll on my YouTube channel where I asked year to date, how is your portfolio doing? Is it outperforming the S&P 500? Currently, the S&P 500 is up 8% year to date. And now currently, my portfolio is significantly outperforming the S&P 500 despite the losses that I've taken. Of course, I'm not going to get every single trade right, but I wanted you guys to just take a moment, hit the subscribe button if you're, new to the channel, hit the like button, but also go to my community post and answer that poll because I just want to gauge how everyone is doing with their portfolios against the benchmark, which is the S&P 500. So if you're up more than 8% for the year, guess what? You're beating the market. So hit that yes on that poll. And if you're underperforming, don't worry, right? We still have a lot of months to go, right? And I don't want to be very cocky and say, look, I'm beating the market, right? Because we still have a few months and who knows, maybe August, September, I might just do horrible, right? Again, I always try to manage my risk. For example, in a recent video, I mentioned I was going to be taking a trade for fiber stock, right? It was my last video that I just uploaded. And I mentioned how I had this stop loss and we ended up seeing fiber fall down. So it triggered my stop loss and I took a mini L. But one thing that I often do is when I do take a trade, I have a predetermined exit and entry. And I try to take trades that are asymmetrical, meaning that the risk to reward, the reward is much higher than the risk. And guess what? That trade failed, but it's, a small L, right? You're not going to get everything right. In fact, I'm going to go ahead and pin in the comment section of this video a shorts video where I show how you could be wrong 60% of the time in the market and still be profitable. It's a 1-minute video. I highly recommend that before you go to the next video, check out the comment section and check out that shorts video where I literally show on Excel how you could be wrong 60%. Everyone thinks that if you're going to be a profitable trader or have a profitable portfolio, you got to be right 80 to 90% of the time. That is wrong. You could be wrong most of the time as long as you take asymmetrical trades. But with that said, hopefully you guys got some value. I'll actually pin the video in the comment section, but I'll post it right over here so you could watch it next. And I'll see you guys on that next video. Take care, guys.